Yeah, so I mean, showing my S&P chart is you gotta be impressed with the recovery today, folks. And again, it seems like Biden's speech gave the market a little extra push. We were already rallying off the lows earlier today. I did do buying this morning pre-market. I was buying like crazy because again, if there's one thing I've learned in my career is that when there's panic out there, that's usually when there's opportunity as well. So in the overnight, I had limit orders out for some cryptocurrencies. Some of them got filled, not all of them. And then same thing this morning. I was when the pre-market was open here, I was buying. So I added to some Facebook, near 190. I think that's back closing in on 205, and some other ones as well. But you can see this reversal here. I mean, incredible reversal in the S&P going green on the day now, and that's after we were down, well over 2% at the lows. Do I think the selling is over? No. I think this is a short-term reprieve. I think things have gotten too bearish, so you have some short covering. And I think ultimately the markets maybe have a week or so of bounce in them. But I do think that, again, we're far from over. If the Fed is really going to stick to it, then you have to come back in this longer S&P range here, which is basically removing this kind of steroidal push on the markets that occurred when all the monetary policy was put into effect during COVID. So basically, and again, I run the crypto service, and over the last I would say since the Olympics ended, I was putting out limit orders when I would go to sleep, because if the invasion did occur, you would get these sharp drops in cryptocurrency prices, even if they generally recovered. And that's always been my policy. Same thing with stocks. These sorts of shocks are quick and you can get good prices, but usually there's a rebound. And so far it's been amazing. I mean, you can see, look at Bitcoin almost trading at the highs of the day here, back above 37,000. Low of the day was around 34,500. So already a rebound. But yeah, that's what I was doing here. One of the little things that I did like about Bitcoin today, and again, this is an interesting little tidbit, is that if you look and compare this chart to the NASDAQ or the S&P, this is the only chart between those three, this one and those two, that didn't make a new low. One of the interesting things that you could kind of start to make a little sense of and maybe see was Bitcoin kind of a store of safety here? Not that it didn't go down, but it didn't make a new low. And again, I still think Bitcoin is a 90% risk asset, but you're starting to see those little signs that everyone is dreaming about becoming reality, where maybe there was a slight amount of buying in Bitcoin today that kept it from breaking that low from January as that store of safety, maybe a little bit in there.
Yeah, and it's starting to potentially put that macro bottom in that, last time you and I talked, I know you're still thinking there's a $20,000 price drop on the, drop to $20,000 on the table. And I'm thinking it's going to be extremely difficult to get below 29,000. And now really it's that $35,000 level.
Yeah, it seems like it. Absolutely. The low, pierced right there, which was really the low of the candles here. My case for 20 or sub 20,000 is going to be a later in the year situation, where if the Fed does see a stall, out, or causes a stall in the economy, then all of a sudden you have inflation, but people are buying less goods, meaning earnings start to tumble down for equities. And then I think that deleveraging could also play an impact in crypto, at least in the near term, and potentially seeing that .com washout, right? And again, I've talked about that before, how there's so many similarities with the .com era, with changing world technology, internet, now blockchain, and the whole .coms were about 2.9 trillion. At the height in November, it was just over 3 trillion for cryptos. I mean, if you look at the chart of this, right? So you have this kind of M-ish pattern, and then if you go to Amazon from the .com era, let me flip over to the monthly chart, weekly chart, but this is just like freaky, right? So same pattern in Amazon as Bitcoin. And then this was where the .com bubble topped out. You had that M pattern, and then we went from $110 down to $6 in that decline. And what I like to show people is, and this is such a cool chart too, is don't think that I don't like Bitcoin or I'm not a fan. I'm a huge long-term bull on Bitcoin. I just think you need to flush out the crap, right? We have all these meme coins and 15,000 cryptos. There's no need for that many cryptocurrencies. And what I want to show people here is, if you went to the chart, and if we go to the monthly chart on Amazon, and let's just say that Bitcoin is the Amazon of today. Well, look at what happened after. Here's your little M top on Bitcoin back in the .com bubble, and then look at it today. So again, yeah, you might have to go through some pain. Maybe Bitcoin goes sub 20,000, maybe it goes 10,000, who knows? Maybe it goes to 7,000. But the idea is, if you really believe in the long-term stability of Bitcoin and what it brings to the table, look at what Amazon did after that. All right, and that's pretty cool. I think recession would be, where you saw inflation still kind of a little bit high, but really this kind of deleveraging taking effect, where the Fed can't come in and print lots of money to save the day because inflation is still high. I think that could really be that catalyst that drops the NASDAQ. Really, again, what's crazy about the NASDAQ is, as nasty as, I think at the lows today, we were down 21% on the NASDAQ. But if you zoom out, look at this chart. Just going back to pre-COVID highs, which was just in 2020, you look at how far you still have to go down. It's remarkable. So, if we did see something like that dropped us down there and we got to here on the NASDAQ, I would dare say that, I couldn't imagine Bitcoin not going lower if the NASDAQ goes down this far. It's remarkable, the NFT situation. And again, it just, it screams people having too much money at the time, to be able to kind of throw down that type of cash for NFTs. And it's become such a big thing online now too. And yeah, just does remind me of situations like the .coms.